excited about what we saw with Firefly's IPO back in August. I think that really signaled the market being ready. I think the amount of excitement behind it, the post IPO pop was very well received. It's going to set up the industry, I think, longer term.
From the Defense and Aerospace Report, this is the DownLink, a podcast about the intersection of space, the space business, and defense. Not just what's over the horizon, but what's happening above it. I'm your host, Laura Winter. So according to Polymarket, most traders, some 48%, believe the U.S. government shutdown will continue at least through October 14th. With just 2% betting it will be over by Monday. The immediate effect on the economy may be something more like a headache for the Federal Reserve Board. The Fed is scheduled to meet and discuss interest rates late this month, but the economic data tools it uses to make decisions are generated by the Bureau of Labor Statistics. And as long as the government is closed, staff at the BLS are furloughed. That means reports on inflation and employment will be delayed, so the Fed may not have the data upon which to base a decision to stay the course or possibly lower interest rates. That could have a small knock-on effect on any transaction that involves borrowing. Looking at the markets, most U.S. trading indexes have continued to climb since Wednesday, October 1st, when the government shutdown started. What has also continued to climb are space company exchange-traded funds. Over the past quarter, ARC Space Exploration and Innovation ETF is up by almost 29%. Procure Space ETF, which has the ticker UFO, it's up by almost 34.5% since July 1st. So what's going on? What's behind this positivity that the space sector is enjoying in the third quarter? And what are the trends driving it? We have the space finance and economy dynamic duo, Chris Quilty of Quilty Space and George Pullen from MilkyWayEconomy. Here's our conversation. Hey, Chris, George, it's great to have you both back on the podcast.
Thanks, Laura. Excited to be back.
Thanks, Laura. Great to be back with you.
Now, we've got a lot to get after as we look back at what happened in the third quarter to better understand what's coming in Q4. So let's quickly get through our introductions. And George, why don't you start us off?
Sure. Thanks, Laura. My name is George Pullen. I'm the Chief Space Economist for MilkyWayEconomy. We're a fifth industrial revolution think tank. We focus on what's being developed right now in deep tech and in the space industry. We believe that the space economy is on a huge growth trajectory, and we believe that the space economy will be the next industrial revolution.
And Chris, what about you?
Thanks. Chris Quilty, founder and CEO of Quilty Space. We are a boutique that specializes on space finance and transactional activity in the space industry.
Thank you both so much for making the time to come on the podcast. So, George, we've got a number of economic factors to decode to understand the state of our economy. The Federal Reserve lowered interest rates without waiting for the core inflation rate to hit its target of 2%. And that's because jobs numbers don't look so good. The latest data puts core inflation at just under 3% at 2.9%. So, where are we in the national economy, and do these factors impact the space economy? George?
So there's two things here. So the first is keep in mind that we've had some revisions of numbers. And those revisions in numbers, particularly as it relates to the job reports, have caused, I would say, some waves. But interestingly, when we look at the new data coming out that's had time to digest those numbers, we're still seeing really good growth in GDP. And so while inflation was close to on target in front of this reduction in the federal rates, I would say that you got to remember GDP has heated up a little bit. So annualized growth in GDP is somewhere north of 3.5%. I believe the latest number was 3.8%. So if you think about that, it's really interesting because what we're seeing is while job growth wasn't as robust as we thought originally in some of the old numbers, we're still seeing really strong spending by the consumer. And since the US economy is predominantly a consumption economy, that consumer showing up and continuing to buy has continued to push GDP up. Now, there's also impacts from the tariffs, and I'm sure you'll have a question about tariffs later, but that's also part of the mix here. For the second part of your question, how it relates to the space industry and why I'm here and Chris is here. As it relates to the space industry, things have been really good. In fact, one of the things that I've been hearing, at least from my portcos and some of my clients, is that they're actually having a really hard time hiring right now because the job market is so tight in the space industry. And that kind of goes against the grain that I've seen statistically, which is we've seen some really big space players do layoffs. But in terms of which people are being laid off versus which people want to be hired or in demand right now, I am hearing again from multiple sources that it's getting tight out there to find the space people that we need in the jobs we're looking for.
And well, speaking though of jobs and also the government shutdown, seeing that the president is threatening to lay off a lot more government workers because of the shutdown, I'm kind of wondering, hey, I mean, does the shutdown have an impact on the space economy? Does it have an impact on space business? I mean, like getting licenses or having the right federal personnel on hand for a launch?
Right. So that's a good question. And I think the answer is, and this is a great economics answer, it depends. So yes. So every shutdown has been a little different. Right. And so I think as we head into, a shutdown and go past just the maybe more typical, sub 1 week fight and go into a longer negotiation, that's when we would really start to see impacts, if any. But again, it's going to depend on which facilities, which personnel, which programs are excluded and considered essential. There's been a lot of talk about how space is critical infrastructure. And if space is really critical infrastructure, then that means it should be categorized and the supporting mechanisms in place categorized in such a way that the impact should be minimum.
Yeah, Laura, I would just add, I mean, we've been in a continuing resolution for, 2 decades where they can't pass a budget. So it's not anything new. Really, the biggest impact, in my view, is during a CR, you're not allowed to start new programs. You just continue. And so there's a lot of things that are, need to get done, especially as Golden Dome comes online in terms of new activities. And the government's really got to figure that out because, legally, you're not supposed to see those new starts.
But this
Right,
is
and
a shutdown, right? I mean, it's not a continuing resolution. So,
but we're debating, but the debate that's being had
is
in
about a
DC,
continuing resolution.
is about continuing resolution. We're not even listening to grown-ups debate about budgets. They're just debating about continuing resolutions. And so when you put it in that perspective, and I think Chris makes a good point here, when you put it in that perspective and the way that new programs can't kick off, I think the fear that I would see among the smaller and medium-sized companies that I service, right? I mean, that kind of, the smaller end of the ecosystem, is they're going to be worried that this delays payments or this might even delay the award of contracts that were, perhaps supposed to be announced sometime in the next 6 weeks. If all of a sudden that gets pushed back and falls out of cycle, that can really affect the financial health of smaller middle-sized companies.
So, Chris, just staying with the shutdown, which is over a vote for a continuing resolution, generally speaking, not just for the space economy or for space business, but what's the effect on the public markets and then for space companies in particular?
Yeah, looking at the stock prices and valuations, not much. I think this is probably the third or fourth straight month where I've seen valuation multiples across all sectors rise. And I think at the start of the year, if you go back to an earlier podcast, I said, like, I'm super excited about 2025. I think there's a lot of things coming into alignment that this is going to be a really good year for the space industry. We've already had 3 IPOs. So the IPO window's open, and I think you're going to see other companies, try to crash through. We've even seen SPAC transactions coming back. So, and in the background, I mean, there is Golden Dome, which everybody knows is out there. It's a $25 billion slug, a good portion of which is going to come, to the space industry. A lot of that, I think the vast majority goes to the interceptors and whatnot, which are pretty highly concentrated, in companies doing solid rocket motors and whatnot. There's been a huge effort by the government to increase the industrial base there. But, across the industry, I would say things have pretty much chugged along without much of a slowdown. We'll see. I mean, if this continuing resolution drags on a little bit longer, you could see some impact. But for now, the macro is just driving these stocks.
And can you give us some examples of some of the space companies that you have said are trading at multiples, just so that people can kind of, put a name to a face, so to speak?
Yeah. So, what we consider our core space companies. So these are, the SATCOM operators, the Earth observation companies, hardware companies like Rocket Lab and MDA. That core space index was up 14% just last month, and compared to kind of like 3 or 4% for most of the averages. And again, that index is up 80% for the year and about 140% year over year.
And if you
Interesting.
look at Rocket Lab specifically, I mean, aren't they up something like 95% year over year? At least that's kind of what I got from looking up the numbers yesterday. Sorry, I'm putting you on the spot, but
Yeah,
I have
no,
to.
yeah. Well, I mean that comes down to the valuation, aspect of this, which is, as we look across different sectors, SATCOM, government services, Earth observation, the space hardware. Interestingly enough, it's the hardware companies that are trading at the highest valuation multiples, about 30 times, and that excludes Rocket Lab because they're trading at 450 times projected 26 EBITDA. And what we've seen actually move that index are two things. One is a lot of the European players, which are all sort of running on the sovereignty play, which I'm sure we'll circle back to. And likewise, some of the defense focused space companies, Carmen, which recently came public, is trading at about 60 times, Kratos at more than 90 times. So the valuation multiples have gotten a little bit in a nosebleed territory for some of these companies. And so we're either going to see them grow into it or a correction at some point.
George, you wanted to jump in?
Yeah, I wanted to add something here. So I think it's also important that when we think about the overall space industry from an economics perspective, that while we're not necessarily, seeing anything to give us concern, right? It's been a really good period, and I agree with Chris. I think it's important to also think about how it's been for the private space industry as well, right? Because a lot of both big household name space players and smaller ones as well are still private companies, right? So they're not necessarily as transparent with their data, and nor are they required to do the types of filings and 10Ks and whatnot with the SEC that allow people to do, really deep financial research. And in public markets, you have, public data, but for these private companies, a lot of times it's based on sentiment. And what I would say is that not only have the numbers been positive, and Chris is, an expert on those public company numbers, I'd also say that sentiment has been positive in the smaller and middle cap companies. You've seen a lot of excitement about Golden Dome spending. You've seen a lot of new partnership announcements within the medium and smaller size space companies. Up until the shutdown, you've seen the flow of both NASA and Department of War and cyber and consider dollars coming into programs. And so, again, all of these things are also material, and they also are good indications for the private side of the coin as well.
I was going to follow up with that question. So I've got to take us back a step. Yes, I need to beat you into submission. But Chris, I need to go back to the public markets because I thought George was going to talk about maybe the public markets a little bit there. Because you said something about SPACs, right? And so I got to ask, what happened to Link's IPO with Slam? And just to bring everyone in on this, Slam Corp, or at least was a special purpose acquisition company, a SPAC, also called a blank check company. And Slam was founded by the former Yankee slugger and third baseman Alex Rodriguez, who is usually called A-Rod. So this deal with Link was not a home run, Chris. It seemed to be more like a bunt gone wrong, or perhaps a balk. What happened?
Yeah, well, perhaps it was timing, perhaps it was the vehicle. I mean, SPACs as an investment vehicle and an alternative to a traditional IPO kind of go in and out of favor. There was a period back in the 2000s where you saw a spate of them, and obviously 2021, 2022 timeframe, the markets just went berserk. I think we had about 13 or 14 space companies that came public through SPACs. But if you were trying to raise money in, let's say, 23 or 24, forget about it. SPACs fell hugely out of favor as they, by and large, underperformed the market by 50 to 90%, in many cases. We're seeing them come back. Is that a sign of frothiness or the fact that the SPAC vehicles have been updated? The SEC came in and made a lot of changes to them. So perhaps a little bit more investor friendly. But in the case of Link, partly timing, that when that deal was announced, it was out of favor. Link, backed out of the transaction. And interestingly enough, we've seen this happen. There were other companies, Deorbit, for example, and Tomorrow.io had filed for SPACs, back in the trough. Both of those companies went out and successfully raised private capital. And I think that's what we've also seen with Link. They got equity investments from SES and Intelsat, which have now merged. But interestingly enough, both companies at the time did not know that the other was making an equity investment. And that's because direct-to-device has become one of the hottest topics in the space industry, and every company is looking for a way to play. For SES, this is a derivative play for them to get access to direct-to-device, short of launching 15,000 satellites, which is what SpaceX or Starlink is about to do for their D2D constellation.
I think something to add there to Chris, just to really drive it home for people, which is it's not always intuitive to think about money having supply and demand principles associated with it. But I will encourage you to put on your economics hats, and I give everyone permission, to put on their economics hats and realize that the supply and demand for money also is at play here and affects businesses' decisions. So to Chris's point, if someone is able to access a supply of money from the private markets, whether that be a private equity fund or perhaps another company that wants to co-invest and partner, then that still gives them cash. So really, they still get the money they need for operations. They still get the money they need for growth without having to go through an IPO process, whether that be in a traditional route or a SPAC. Neither of those routes are easy. And so if they get them in another source, again, that supply and demand of money will impact their decisions to go public or not.
Quoting a certain space economist, wink, wink, nudge, nudge, maybe this was an adult decision because, maybe perhaps doing an IPO really shouldn't be the off-ramp.
Yeah.
Right.
Yeah,
and that's maybe somebody out there in the universe was listening to you, George. I have no idea. But there have been other sort of, interesting developments, most notably Golden Dome. Funding from that really hasn't come through. We don't know what the architecture is for the next generation missile defense system, but there have been industry days. So I was kind of wondering from your perspective, George, how is the process for the companies that you work with? I mean, do they feel that they're involved, or are they just sort of sitting around on the sidelines? And I'm asking because I've heard from some people that they feel like it's kind of set up really for the primes to play, in that if you're, smaller, medium sized or coming up with new technology, that you kind of don't get the door opened for you. Is that truly the case?
So I think there's two things there, right? So the first is you have to be the right size to walk through the door when we're talking about any extremely large government program, particularly when it's tied to a new piece of critical infrastructure. And so what I've seen in at least 3, I'll say 4 just in case they left someone out, of the companies I work with, is they're getting through the door with a partnership, right? So they're providing an exquisite piece of their technology alongside one of the big primes who's going for the bigger contract. So they're supporting, they're looking to subcontract, they're looking to still get their technology, cutting edge, first of its kind things implemented, ready on day one with the Prime. But I don't think anyone who's been in space and defense for a while would be naive enough to think that oh yes, and half this money for this brand new program is going to go to the little guys. That's just not how it works.
Yeah, and there's a precedent here, right? The Europeans, in setting up their IRIS² program, specifically set aside, maybe I'm getting it wrong, I think it's 20% of the funds have to go to small, medium-sized companies. So
right.
and that happens in the U.S. government also, right? There are set-asides for small companies. Specifically to Golden Dome, it's a bit of a challenge, right? Because they need two things. They need innovative new technology, and they need to move fast, right? That tells you we got to depend on new startup, innovative companies. Think of the Andurils and Palantirs, sort of the new defense tech players. On the flip side, I mean, this is incredibly complex and a military system, and hence you kind of need somebody who can manage these type things. So it'll be a challenge. Just to throw something in here, I think the biggest challenge for Golden Dome is probably going to be launch, because this is an industry that is severely launch constrained right now. Our forecast is there's really no heavy lift commercial launch capability available until like mid 28, because Amazon bought up $10 billion worth of launch, and you got new launch vehicles that are coming up to speed very slowly. And I haven't even worked Golden Dome into that forecast.
Hold on to that thought, Chris, because we're getting to that as well in just, I'd say, a few minutes when we're going to take a look at the trends that are going to, kind of keep being the through line, through the next quarter and into the new year. But before we get to that, what were the biggest space business stories for Q3? And will their effects carry on into Q4? And I do want to ask you about this, Chris. What are the effects of the EchoStar spectrum sell-off? I mean, what does it really mean?
Yeah, so that was sort of the talk of the show at the World Satellite Business Week a couple weeks ago in Paris. That announcement came out just before the show. And then we also had an announcement from Viasat and Space 42 around their new direct-to-device infrastructure play that they're doing. On the one hand, seeing a company like SpaceX, Starlink, gobble up hugely valuable spectrum, has got to be a challenge for those who want to play in the direct-to-device space. On the flip side, I think it should put to rest a lot of the investor concerns around whether this technology is real or not. If SpaceX is going to spend $17 billion and launch 15,000 satellites for this application, I think they're believers in it.
And George, what do you think is the number one or number two most important space story in Q3?
I'm still excited about what we saw with Firefly's IPO back in August. I think that really signaled the market being ready. I think the amount of excitement behind it, the post IPO pop was very well received. It's going to set up the industry, I think, longer term for other space companies to continue to get excited about going public, or about accessing that level of capital for their continued growth. And, to Chris's point, we need more launch. And so if there are ways for Firefly to grow post IPO and take in some of that market, I think that's just good for the entire industry.
And I want to ask you guys about another story that's somewhat recent, and it combines, all the things that you were just talking about: satellites, launch, direct to device, and that is a three-way space play. That's a satellite venture that's being set up to compete with SpaceX, and the three companies involved are Airbus, Thales, and Leonardo. Good, bad, or ugly? Is this a good idea? Does this have success behind it, or is this just hoping for the best?
Yeah, I don't get it. I mean, let's combine three big companies into one gargantuan company, and that'll help us to compete. It doesn't sound like a winning strategy. Now, look, I mean, part of it has come out of necessity because these companies have been so badly hurt in their traditional geosatellite manufacturing business. and they just need to downsize and consolidate for that purpose. But it's hard to see where having a single large European prime is a winning strategy, in my view.
Well, but isn't that what we've seen Europe push its companies into in other industries, right? We've seen them push themselves into that situation in aerospace. We've seen them push themselves in that situation in automotive. And so maybe this pressure is coming from outside the boardroom.
And then there was silence. Okay.
Pause for effect.
I know, right? I mean, Chris, you were just in Paris. I thought you would have, a wee bit of insight on that.
No, I mean, this is a top-down driven, I think, amongst the European powers to try to find a way to compete. Yeah. And there's a lot of good assets in there. I think just the challenge of trying to put all those together and organize it, in my view, I'd be more excited if I saw, the various pieces being broken up into several companies with expertise in a specific area, rather than one macro company that does everything.
All right. So correct me if I'm wrong. If I'm not mistaken, I think they're only spinning off parts of themselves, not the three merging together into one company. Or maybe that's not clear, because the way I read it,
you're correct,
was that they were going to take pieces that were specific to direct-to-device and yet retain their own, individual companies, right? But that they were going to create this other new entity, the three of them with their particular assets. I mean, isn't that kind of sort of what you're talking about that they should do?
So can I jump in? I'll give Chris.
Yes,
I'll give Chris a second there.
Yeah, give him a life ring.
No, but I'm going to take it one step out, right? So I'm going to get a little closer to 30,000 feet here on economics angle, which is when you see companies like this, presumably a little bit disparate and perhaps also desperate, merging in this way or being forced perhaps from the top to merge in this way to compete. You also have to remember, and again, I'm going to talk about the supply and demand of money again. There's some really different factors at play right now than what we've seen in the last decade. And some of those factors is just the size of the checks that are going into companies. And so what I mean by that is both the movement toward indexification of markets. So that's where all the public markets and most of the participants in public markets are essentially just indexed, right? They might have a couple ETF bets, exchange traded funds. They might have a couple ETF bets, but for the most part, everyone's indexed, right? And you can go and find different sources that estimate this, but it is well in excess of 2/3 of the market is just indexed now, right? So people making specific company bets or sector bets are much in the minority. Well, combine that with the idea that if you are someone making those large bets for your investors into a sector, into a given company, you're making those bets in strategic ways with large checks. So in the same time, does it make sense for this company to Mighty Morphin Power Ranger, right? And come together into this new bigger thing? Maybe or maybe not from a strategic point of view, but from its ability to gather additional capital at that size, you now have a big enough company that it can afford and can take on bigger checks.
It can also take bigger risks.
It can take a wider array of risks, right? Because I can take bigger risks if they're uncorrelated, right? I can take 5 bigger risks if those 5 bigger risks are uncorrelated. And so again, I'm not in the weeds of this specific deal because I agree with Chris. It's a little bit kind of, we'll see. But I think overall, though, the trend and what the money says and the supply and demand of money says is that being bigger right now helps you.
Yeah, maybe I'll switch the narrative, just flipping back to September transaction data on the private company side. I actually had 4 privately funded companies in satellite manufacturing funded. Reorbit, which is a Finnish satellite manufacturer, raised like $53 million in a Series A. K2 Space, which is building gargantuan satellites, got an extra $15 million coming in after they did like $150 million round earlier. Apex Space, which is a startup bus builder, just did a $200 million round after doing a $200 million round 6 months ago. And even a little company out there, Rendezvous Robotics, which did a pre-seed, and they've got self-assembling satellites. So there's a lot of activity happening in this area where you're seeing a lot of innovation. If you look at the combination of those three large European players, and it's simply about consolidating down the cost and the technology on redundant programs to gain efficiency, then yes. If it is creating a national champion that's going to suck up all the major contracts to the detriment of a startup community in Europe that has a really hard time getting into growth stage capital, then that's a bad thing.
Well, that's really interesting. I'm actually flipping things around of where I was going to go, because I'm going to go straight into trends, because it seemingly seems to be a trend in Europe of wanting to spend a lot more on space, right? So those listening to this podcast may remember an episode earlier this year about the European Commission proposing a new defense fund called Security Action for Europe, or SAFE. And it's a $170 billion fund. And it says, like in the actual documents, that it is there to assist European nations to spend more on defense and spend more on developing defense technologies. And it did specify space technologies as well as cyber and other things. On top of that, just last week, we had the Minister of Defense, Boris Pistorius of Germany, that his nation intends to spend roughly $41 billion on defense-related space systems before the end of this decade. So I would say, 4 years and a quarter. That's a lot of spending to do, especially for Germany, on just space systems and defense. So it does feel like Europe is waking up, understanding the criticality of having their own sovereign space systems, no? And investing in it with big money.
Yeah, I mean, that has been a trend for the past couple of years. If you look at the launch side, Ariane Space was the national champion, and you had all these startup launch companies like PLD and RFA and High Impulse that sort of went out and got funding to develop rockets despite what the powers that be wanted. And you're now seeing Ariane Space switch, and they've got their own medium lift launch vehicle that they're pursuing. We've seen the Italians announce that they're going to sign up for Starlink rather than participating in Iris Squared. The Germans, have been have given a lot of pushback on Iris Squared and the funding, and which companies are getting funding. Absolutely, the what is it, 41 billion that the Germans committed to space spending is pretty indicative. I think the biggest challenge, for Europe is their balance sheet. I mean, France specifically is having a lot of budgetary challenges, and yet they see the need for significantly stepping up their defense spending. And even outside of Europe, I mean, Japan launched a $6-7 billion space investment fund themselves. And if I look across my Earth observation companies, they've seen a huge number of sovereign deals. Planet just inked deals with Germany and Japan to supply Pelican Earth imaging satellites. You've seen Black Sky, ImageSat, and others all win sovereign deals with Chile, Vietnam, India, and other countries. So that sovereignty play has been a major growth driver. And as I mentioned before, it's also driving valuations of a lot of companies.
It's a lot of money. 41 billion is more money than the Space Force is getting allegedly for FY 2026. And that's with the Golden Dome money, because the traditional budget is actually, I think, around 26 billion. So that's a lot of money from a country that does not have the same population that we do.
And we should think about these trends toward what I would call the creation or the movement of hemispheric winners for the space economy as something that is part of a much larger trend in the economy overall that we're seeing in countries and industries that are also trying to make sure they have national champions across the board. So whether that's a national champion for their power, whether that's a national champion for their semiconductors, like the US is attempting, whether that's a national champion in space, These are trends we're seeing across industries and in different hemispheres right now. So even though we're focused on what it's doing in the space industry, I think it's important to remember that this is happening across industries right now.
Now, I realize that we are running out of time, and I know Chris has got a hard stop, but I don't want to rob him of his chance to talk about the launch crunch. Rocket Lab is up, and I said 96% since the beginning of the year. That's actually incorrect. Well, at least when I checked yesterday, it was up 92.7% since January 1. So please excuse me, everybody. But it has a new contract with synthetic aperture radar satellite company Synspective, and that adds 10 launches to the original order, bringing the total of launches under contract just with that company to 21. So, Chris, what's going on with launch and why does it matter?
Yeah, well, I mean, obviously, you don't have a space industry without launch, which is why it matters. But you got to think of the launch market in two pieces, right? There is the heavy lift launch market, which serves, the geo and a lot of government applications. And then you've got the small launch market, small to medium. And in that small launch market, Rocket Lab has been the runaway winner, the one company able to regularly launch. But you've got a host of companies. I mean, geez, I remember 2 years ago, I was forecasting like 16 new small launch vehicles doing their maiden launch.
Oh, there was a whole
And
discussion about there being too many launch companies, right? I
yeah,
mean, there was a
but the
discussion
reality,
that some of them are going to die because there just isn't enough demand. And now that the story seems to have been flipped.
and the difference is, and I think where the real issues are on the heavy lift side, right? And there are a discrete number of launch vehicles here. You've got Blue Origin with the New Glenn, you got United Launch Alliance with the Vulcan, Ariane Space with the Ariane 6. You could say MHI in Japan, but they only launch 6 times a year. India doesn't have anything that would qualify as heavy lift. And then you got SpaceX. And at this point, the challenge that we have is the first three launch vehicles that I mentioned are all doing forklift upgrades. These are brand new rockets. Blue Origin has flown once. They were predicting 8 to 10 times this year. Same thing, ULA. They got a slap on the wrist from the Pentagon because they're so far behind. I think they came into 2025 with like a dozen or more government missions in backlog. And the industry is absolutely depending upon these companies to jack their launch rates. But here's the reality: it took SpaceX with the Falcon 9 8 years to get to double-digit launch rates. And hopefully, there's been a bit of learning curve that these guys have picked up from what SpaceX has done. But if these companies fail to raise their launch rate, the commercial industry is in trouble, but the government is also kind of stuck without a way to get to orbit on Golden Dome.
George, I can see you and nobody else can except for Chris and I, right? And we see you, with your head going back and forth. What's up?
I definitely agree with Chris's trends here. I think if we don't see New Glenn, if we don't see ULA increase its ability to launch rapidly,
which, if I'm not mistaken, ULA's rocket does depend upon Blue Origin rocket engines, not right. So that's like actually two strikes on Blue Origin. Just saying.
Yeah, keep that in mind. Like
or two pitches in the strike zone. Or two pitches in the strike zone.
One of those launch vehicles brings both out of service for a 6 to 9 month period if it's engine related. So
right.
But we need that. We need those additional launches to come online for things to really open up. The backlogs are building. Amazon's entire Kuiper network depends on more launches and more launches happening. As Chris mentioned earlier, they've already reserved a lot of space. I'm still waiting to see what happens with Sierra, with Dream Chaser. I think that's really important to see happen. I'm also waiting and hoping that we see good movement on, quite frankly, some of the private space station companies, because while it might not be on people's radar as something to be watching in Q4, if we're not seeing the necessary movement by the end of this year, then there will be an absence of U.S. presence in space as humans. There just will be. You have to make certain things happen in Q4 of this year, or it's going to be really hard to catch up in 26 and 27.
I worked for a fellow by the name of General Stan McChrystal, and he is the one who introduced me to the saying, hope is not a strategy. And with that, we have run out of time. So George, Chris, thank you both so much for making the time to come on the podcast.
Thank you, Laura.
You bet. It's always fun, except for George.
Oh, I love you, Chris.
Yeah.
I love you, George. That's it for this week. For your daily dose of award-winning defense coverage, listen to the Defense and Aerospace Report with Vago Muradian. And for the maritime domain, listen to Cavis Ships with Chris Cavis and Chris Cervello. And get your air domain news and analysis from the Air Power Podcast with JJ Gertler and Vago Muradian. I'm Laura Winter. Thank you for listening.